Rare earth materials are scorching hot right now. And fortunately for us, Sashien Godakandae joins us now from the north, Ottawa, Canada. Sashien, thank you for joining us today.
Thanks, Carl. Happy to be here.
Great to have you. Can you please tell the audience a little bit about your background?
Yeah, Carl, I'm sort of a tech investor. I've spent a lot of time in the smart home, smart building space over the years. And, I've spent a lot of time obviously in Canada, but I've traveled a little bit to the Silicon Valley and sort of discovered a little bit more about what technology means to North America and specifically the United States. And so over the coming years, I've spent quite a bit of time in technology and investing in sort of the public market space.
Absolutely, and we look forward to getting some of your expertise here today. So let's get into this though. Rare earths, how do they tie into electrification and climate change?
In terms of rare earth and materials and climate change, there's quite a bit of action I'm seeing now in North America, and we've already seen a little bit of this in China as well, but there's quite a bit of action now that I'm hearing in North America, specifically the United States, where rare earth and materials is coming about, and there's a lot more production that's happening actually inside of California. And so I think a little bit of what we'll kind of talk about today is sort of the understanding of how that applies to climate change and how we can kind of look to support some of these really interesting resources within North America for the parts that we'll look into within climate change.
Absolutely. Now talk to me about demand. Is there a big demand out there?
I think so. When I look at one of my favorite companies, Tesla, I think recently we've seen sort of the market cap at about $200 billion. It's interesting to think, Carl, as I looked at a lot of these companies over the last few months during this pandemic, I thought to myself, Tesla was a company that was maybe $700 or $800 several months ago, and now it trades at probably about $1,500 US today. And so when I look under the hood and kind of dive a little bit deeper into that company, I think a lot of us kind of underestimated the value of Tesla as electric vehicle sort of provider. But what I kind of see more or less now and into the future is kind of how electric vehicles play within renewable energy and how Tesla might be an interesting case for renewable energy for years to come and how they can sort of benefit from that perspective.
Absolutely. Now, FVAC is basically expanding and trying to open up operations here in the US and in North America. Can you explain the value of having a domestic supply of rare earths here in North America?
I think from my perspective, what I'm seeing in that company, they've done some interesting things very early on with FVAC specifically. I think when they do this sort of merger, what we're looking at here, for folks that don't know, FVAC is sort of Fortress Value Acquisition company. And so they're sort of doing a merger with MP, which is sort of a materials company. And so with that, what we expect in Q4, which is coming up pretty soon, is sort of this idea of a special acquisition holding company, which we often refer to as a SPAC now. Bill Ackman and many other accredited investors, institutional groups are involved in sort of this spin-off. And what I sort of see, Carl, is that there'll be an interesting sort of value proposition for a company called the FVAC in this case, with the fact that they are now sourcing a lot of this production sort of through the United States. And I think at the end of it all, it becomes a really low cost value though for the company and for the investors and the folks that will be obviously using this.
Okay. Now, materials and energy, is there an asymmetric upside?
I think so, Carl. When I look at a company like that, what they're sort of trading at on the market right now, I think is fairly low cost. We've kind of been seeing it fluctuating in the $13 to $14 value, and it's just recently kind of simmered down a little bit, you could say, going now around the $12 mark. The value I see for that, when I think asymmetric upside, I think that, for the lead investors, which would be Social Capital and Omega, two very large firms that have been very successful in tech and traditional investments, I think to myself, at the cost of what they are sort of looking at, which is about a $10 buy-in from their perspective at about $200 million. I think as an investor, it becomes very interesting and compelling to get involved in a company like this, because at the end of the day, once they complete their merger, which is expected in Q4, we'll see the stock likely rise quite a bit further from where it is right now. And maybe it might be in, the mid-teen sort of range and further on. But I think at the end of the day, there's asymmetric upside, just given the fact that the low price of the stock right now and how much value there might be. There's several hundred millions in sort of revenue, you could say, at this point. Once that merger's complete and there's sort of the work done in stage 2 and 3, from my understanding, we'll sort of see a little bit more production, a lot more value. And I think that becomes a very good asymmetric upside sort of bet, you could say.
Sashien, let's talk risk reward. What should we be keeping our eye on here?
I think at the end of the day, Carl, as I sort of mentioned, the way I frame this is, how do I get involved in an interesting sort of play where I can support something that, allows us to really bet on something really important to me specifically, which is climate change. And I think folks that are sort of looking at this from the outside in, they're understanding sort of what this means to the company and what this means to the marketplace. I think it's really important that all of us that sort of invest and look at companies that we can sort of support, we have to kind of look at it from an outside sort of perspective looking in. And so the way I look at it is that this is a chance to kind of look at a company that's got a low cost sort of production. They can source a lot of this themselves. And by allowing this company to go public through this sort of merger deal, it'll allow us to get an interesting sort of reward, I guess, again, when I look at this, because the cost of the stock itself is still fairly low and very close to what the institutional investors are sort of in at a buy-in rate. But at the end of the day, I think from years to come from now, companies like Tesla, I think, again, becomes the interesting use case for them to be involved in this sort of equation, because at the end of the day, they could be sourcing a lot of this for their business. And we all kind of understand what Tesla is doing right now. And I think electric vehicles has been obviously their thing, but I also think that, they're going to be playing a big part in the renewable energy space. And I think that's going to really help on the climate change side as well.
Absolutely. This is an evolving landscape. Sashien, thank you for unpacking this for us.
Thank you, Carl.